as long as he doesn't want to sell his house or doesn't want to, use it as collateral for some other loan, yeah, he can enjoy those low payments for another couple of years. And what he should be doing is saving money so that he has the money to make the higher payments.
Right.
But if he decides that he doesn't want to live in that house anymore, that he wants to sell it for some reason, the pool of potential buyers don't have access to that low rate. They now have to borrow money at the market rate. And so if your ability to buy is a function of the monthly payments on your mortgage, the minute the mortgage rates are high, the real estate price has to fall. It's just like a bond, right? A mortgage, real estate is almost like a bond in the sense that it moves opposite with interest rates. So bond prices went up when interest rates were low. That's why all these banks have lost so much money, because interest rates went up and the value of their bonds went down. Well, that's what's happening with real estate in a higher rate environment. If you have to pay more to borrow money to buy a house, then you have to pay less for the house. The mortgage rate helps determine the demand for housing. And
Absolutely.
as the rate goes up, the demand goes down. People still want to live in a house, but they can't afford to pay as much money. So a lot of people that got these low rates, if they bought their home during the time period where those rates were low, they paid a very high price. The people who are in better shape are the people who already owned a home before the prices went way up, but had a mortgage, and then they refinanced the mortgage at the lower rates. I don't know to what degree that went on in Canada, but that went on a lot in the US. But the flip side of that is those mortgage-backed securities are out there owned by somebody. So the gain for the borrower is the loss for the lender. I talk about that a lot with my own mortgage. So if I've got this 3 3/8 mortgage, which is up for the next 25, 26 years, Bank of America owns that mortgage. They're going to be losing money on that mortgage for 25 years. I mean, they don't want that mortgage anymore. I mean, what good is it? I'm paying them 3 3/8. They could get more than that if they just park their money with the Fed.
Right.
And if they went to sell my mortgage, maybe they'd be able to get 70 cents for it, 65 cents, I don't know. But now they can just take that crappy mortgage and hand it to the Federal Reserve and get back $1, even though it's only worth 70 cents. And that's obviously what's going to happen. And that's why the Fed's balance sheet is going to balloon and why inflation is going up, not down, because they have to print money in order to get a Bank of America out of jail. But, so all the money that all the borrowers are making is a function of what everybody else is losing. And I was pointing this out for 10 years, talking about the other side of the savings. Everybody wanted to focus on how great this was, that everybody could refinance their mortgages at these super low rates. And I kept saying, but what happens to the lenders when rates go up? This is a financial crisis in the making. And of course, now the crisis that I warned about for a decade is upon us. The operative word there is bought. Right? You talk about how much we buy from China. Well, buying implies paying. Right? If you bought something, then you paid for it. But we haven't really paid for anything that we get from China, right? Because how do we pay? Because the Chinese send us actual stuff, right? Real products, like some of the consumer electronics that you're using in your studio there, right? So where did they get these products? Did they just wave a wand and they just magically appeared? No, they needed to devote actual scarce resources that could have been used for something else. They had to take land, labor, and capital and use it to produce those goods, which they then shipped over to the United States. And then of course they had to pay the cost of shipping them over there. And then they had to pay the cost of bringing the ships back empty, because there's nothing that we put on there. So they have to come all the way back empty so they can get loaded up again with more stuff, right? So the Chinese are expending a lot of resources, labor, capital, land, to produce these products and ship them over to the United States. And what are we shipping back to China, right? What are they getting in exchange for all that hard work and all those resources? Our paper, right? Dollars, Federal Reserve notes. Right. Well, where'd they came from? Well, they came out of thin air. We just conjured them into existence at the Fed, right? At the click of a button, whatever. We don't even have to use paper and ink anymore. We just create it magically, in cyberspace. And now we send that over there, right? Electronically. That's why we don't need a ship, because it's just nothing.
Right.
And so then what do the Chinese do with these dollars? Well, they lend them right back to us. They buy treasuries, they buy mortgage-backed securities. And so what did we give up? Nothing. We got all this stuff, and we didn't have to do any work. We didn't have to expend any resources to pay for it. On the other hand, the Chinese had to use up all these resources to make stuff, and they got nothing to show for it. And so this is not a symbiotic relationship. I think this is parasitic. I think the United States is gaining at the expense of the Chinese and everybody else who is participating in this game. But I think what will eventually happen when the Chinese come to their senses, and they eventually will. I mean, you can't expect them to do something this stupid indefinitely. I mean, they're not dumb. They'll figure it out if they haven't already figured it out. And they're going to want to end this parasitic relationship. And so what would happen then? Because everybody thinks, well, China would be in a lot of trouble if, they couldn't ship all their stuff to America. It's like, right. No, the Chinese would all of a sudden be in a much better position because they could take those exact same goods that they're shipping to us, and the Chinese can buy them, use them themselves. Chinese workers could actually enjoy the fruits of their labor. And if they don't want the identical products that are being manufactured for us, well, they could use that capacity and that labor to do something that they do want, right, instead of doing something that we want, right? So they have the resources, they have the infrastructure, they have all the necessary accoutrements to wealth and to increasing their standard of living. We don't. Because in the relationship where the U.S. and China no longer trade with one another, the Chinese keep all their stuff and they get to enjoy it, and we no longer have access to that stuff. So we have a huge change. So now the Chinese get more stuff to consume, we get less. So what happens in America? Prices skyrocket. You go over to Walmart and all the shelves are empty. There's nothing there to buy.
Right.
Hey,
and we've actually seen that a little bit, right? We've already seen that a little bit, with the COVID and when we see these trade issue, these supply chain issues, right? I mean, we've experienced that already. We've already had a little preview of what that would look like.
So basically, we keep all of our paper money, and they keep all their stuff, and so they get lower prices and more stuff. We get much higher prices and less stuff. Our inflation stays here. We can't export our inflation to China anymore. It stays in the United States, and we have to suffer the full consequences of that money printing. And of course, there's going to be a big snowball effect because we have an entire economy built around the distribution of stuff that we get for free from the Chinese and everybody else. So if Walmart no longer has anything to sell, well, Walmart can't be in business, or at least not at the scale that it is now. So it has to start cutting back. It has to start laying off workers, right? The entire service sector economy collapses if it no longer has any goods to sell, right? We're just a distribution machine for the stuff that everybody else makes. Well, if we can no longer import that stuff, then we don't need to distribute it anymore. And so the recession that would accompany, this cessation of this relationship, would be catastrophic.